Does it feel good to be back out at the beach? I've been waiting to come out here and shoot a beach video for you guys. It's been a whole month since I've been back in Florida. This is the first beach video because I just haven't had a chance. It's like the weather just hasn't been good for it. It's either super windy or super hot. Well, today it's neither. So perfect day to be out here shooting a video and a very calming place to talk about a very disturbing thing that I came across, which is the fact that more places are starting to offer up 40-year mortgages. Now, the last time I covered this was quite some time ago. When I did cover it last, it was pertaining to people that have an FHA mortgage and say they can't pay and they're having a hard time. They can actually refinance into a 40-year mortgage to help lower their mortgage payments. And that's typically been the only way you could get a 40-year mortgage. Well, it turns out there are some lenders, little by little, that are starting to roll this out for people, guys. And this is not a joke. I'm not making this up. You can go check the story in the description. I'm going to link everything down below if you want to look at it yourself. Now, first of all, let's just look at the reality here. The Consumer Financial Protection Bureau, they classify mortgages with longer than a 30-year term as unqualified, meaning that you shouldn't own a house, okay? But yet, there's lenders now that are starting to do this. Because when a loan is qualified, it means that the borrower meets a certain set of criteria that deems them able to reasonably afford the house that they're looking to purchase. But people that are getting 40-year mortgages do not fall into this category. And so you're not gonna be able to walk into your average bank and get a 40-year mortgage right now, but you do have some smaller banks, some credit unions, and non-traditional lenders starting to offer this as an option. And of course, it's going to come at a higher interest rate than you're going to get when you get a 30-year mortgage because it is a higher risk. One of those lenders, for example, is called Carrington Mortgage. They offer a 40-year option. Now, that's the only lender that they name in this story that is doing this, but I'm sure there's other ones out there like it, especially with the smaller banks and lending institutions, especially when you're talking about non-traditional, because lenders that will give out loans for people that are basically otherwise not qualified, they will do so at a higher interest rate. Another way you can look at these type of loans is non-conforming loans. And then, of course, if you have a Freddie Mae, Fannie Mac, or FHA backed loan, you could also qualify to get a 40-year mortgage if you can prove that you're having a hard enough time right now with your current mortgage, and this is the only way you'll be able to afford to keep your house. But in reality, guys, when I covered this before, my opinion on it has not changed. It just means you're kicking the can down the road in terms of affordability, and if you're struggling to afford the 30-year payment now, the 40-year payment's not going to save you that much on a monthly basis, maybe a few $100s, and then if you're not financially responsible or if your cost of ownership goes up too high and your salary doesn't go up along with it, you're just delaying the inevitable. You're delaying how long you're going to have until you can no longer hang on to the house because you can't afford it anymore. Now, I'm glad they bring this up in this story because one thing that they ask people as a question is a 40-year mortgage a good idea? And they're saying it might be a good option for only a few specific situations. Investors who are looking for cheap monthly payments to increase cash flow, which actually in that case, it probably does make sense because if you're buying real estate for investment and you can somehow get a 40-year mortgage and increase your monthly cash flow, that makes the property profitable. And your tenants are paying off that mortgage, so who cares how long it is one way to look at it. Here's another example they give where this might make sense. Borrowers with temporarily reduced income might also benefit from a 40-year mortgage with 10 years of interest-only payments. And they're giving examples like medical residents, surgical fellows, tech employees waiting for stock options to vest, or those waiting to access a trust fund or legal settlement. So basically, you're temporarily broke, but you know you're going to come into some serious amount of cash later on, which is going to increase the amount you're going to be able to pay. As they're saying, who should be doing this right now? And notice how you didn't see in there, the people who are supposed to be taking these type of loans are people that are having a hardship right now. People that are having a hard time paying the bills, like the FHA and Freddie Mac and Fannie Mae refinance programs. Those are not the type of people that should have a 40-year mortgage, but unfortunately, those are the type of people that are getting it the most. And so one thing to talk about with this is you have to understand that part of the reason that real estate is so expensive right now is because we have 30-year mortgages. And that's something that really didn't exist until, I believe, back around, I want to say the 1950s or 60s. Don't quote me on that, guys, but it hasn't been around forever, okay? Because prior to then, the most you could get for a mortgage was like 10 years. And people would pay off their house in about 10 years, back when real estate was more reasonably priced. Well, they come out with this genius plan of having the 30-year mortgage, which allows people to dramatically lower their payments and allow more people the ability to buy homes. And this whole situation with more lenders starting to offer 40-year mortgages is just a continuation of that, okay? Eventually, if things keep going like this, we're gonna be in a situation where they're gonna have infinity mortgages. It's gonna be interest only forever, essentially be renting from the bank in order to keep your payment as low as possible. So you'll never own that house. You'll never hold the deed to that property. You'll just be renting it forever from the bank and paying them interest, which is basically the same thing as renting from a landlord. There's no difference at that point, other than maybe you're guaranteed not to get kicked out of the house and maybe your interest rate payment is fixed, things like that. But that's the future of where this is going if we continue to see more lenders allow this. But honestly, I think that the market will correct itself eventually, because you're going to get enough people that cannot afford their payment, guys, even with a 40-year mortgage, because of just how much the expenses on everything are rising. It is just totally insane right now where the cost of living is going. Want to talk cost of living? How about car insurance, guys? Right now, car insurance is absolutely exploding. At least it is for me personally. Yeah, that's right. This is my personal anecdote. This is not a news story or something that somebody sent me. This is something that's happening to me right now. So I'm the kind of person that pays my car insurance in 6-month installments. I pay the full thing up front in order to get the maximum discount. And I've done it like that pretty much since I moved to Florida. And first of all, a little backstory here. When I moved to Florida, and I changed my insurance from Illinois to Florida, it did go up, but it wasn't a dramatic increase. I probably had to pay an extra $150 to $200 more every 6 months on the policy versus what it costs in Illinois. So it was a bump, but it wasn't dramatic. And then it stayed pretty stable like that for many years. But over the past several years, it has been slowly creeping up. And this year, it's absolutely exploding, because I just got my latest renewal notice. My last 6-month premium was $1,302 for the 6 months, paid in advance, okay? Well, now they want an extra $452, bringing the total now to $1,754. That's a 26% increase in just 6 months, guys. 26% in 6 months. That is completely insane, and it's unsustainable. Imagine if every 6 months it goes up like that, and people have to pay this, guys. And that's on the cheap side, remember? Because I paid the full thing in advance. Because if I were to actually pay this car insurance in installments, the first payment would be $367.91, and then thereafter it would be $372.82 per month for the next 5 months, guys. How crazy is that? I have full coverage on my Jeep, and I have just liability coverage on my Camaro. That's what we're paying for this. So I honestly don't know how people are going to be able to continue to keep up with these ever increasing costs. You know, like a lot of people think, oh, this is just a joke. You know, the economy's doing great, everybody's doing great, and there's nothing to see here. Well, that is clearly not true, because I've given you guys several examples of just my own anecdotes here of things that are happening to me personally. You know, my property taxes are going up. By the way, I wanted to fight that, and I realized later on that it was already too late, guys, because you only have until like the middle of September to contest your property tax bill going up, and I wasn't even back in Miami until the middle of October. So I completely missed the window to be able to contest that. So that's gonna go up. So you have the property taxes going up an extra $1,300 a year, whatever it was. You have the car insurance now going up an extra $452 for the 6 months. Like, where does it end? Next is going to be the HOA dues. Next it's going to be the insurance for the condo. Like, it never ends. And I tell you guys about this because a lot of people think that, oh, it's going to be easy to just buy a house and do all this stuff and, you know, get ahead in life, and it's anything but. It is very difficult, and you have to make a lot of money, guys. You have to make far more money than you actually need in order to be able to keep up with this stuff, because you never know how much things are going to go up and by when. That's the biggest problem. And you know things are getting bad, and you know things are getting expensive out there when you see things like this. And thanks Scott for sending over this crazy story about Canadian prisoners who are asking to extend their prison sentence due to housing costs, guys. Have you ever heard of such a thing? Somebody saying, you know, life is so expensive, getting a place to live is so expensive that I'd rather be locked up in jail longer just so I don't have to deal with that. That's what it's coming to right now. And this is not made up either. You have a defense lawyer in Canada who actually put this out on X a while ago. Her name is Melanie Begalka. I think I'm saying that right. And she's a lawyer over in Vancouver, Canada. And she says at least 3 of her clients right now would rather stay locked up than be released back into the world because they don't know what they're gonna do. And you know, that's just like a recipe for people turning back to crime, right? Because if you come out of prison and your prospects are so bleak and you know you're not gonna be able to afford a place to live, that's gonna put somebody like that into a desperate position where they're gonna have to do whatever they need to do to survive, and clearly crime is what they know how to do. Now, I can't say I blame them, guys. Like, if I was homeless, I would probably do whatever I could to get locked up all the time, and that way, you know, you're in jail. You get free food, you got a free place to live, you don't have to worry about paying any bills, you're not sleeping on the streets and the tents with a bunch of other drug addicts. I don't know, never been to jail, hope I never do go to jail, but right off the bat, it sounds like it's probably a little bit better than being homeless. And just like I said, this lawyer's explanation of why people would rather do this, she says that the extreme housing crisis in Canada, the fear of dangerous drugs on the street, and the general lack of resources is why people would rather stay behind bars just a little longer. Well, it's not gonna have to be just a little longer. It's gonna have to be for a really long time, because if you think home prices in the US are expensive, it is far worse in Canada, making it almost impossible for the average Joe to be able to buy a house over there right now, let alone somebody that just got out of prison with nothing. And it's not just prisoners that are having affordability problems right now. No, no, no. The average American consumer right now as well is saying that they're ready to go into further debt this holiday shopping season in order to be able to afford things. Surprise, surprise. In fact, 1 in 3 Americans right now say that they will use buy now, pay later in order to make people happy and buy presents, guys. Like, how demented is this that people are willing to sacrifice their own financial well-being to put a smile on somebody's face at Christmas? Now, I understand it's a very kind-hearted thing to do, and it shows that the kind of person that they are in terms of just wanting to, you know, please their loved ones, okay? But nobody should be doing this at the expense of their own financial future. That's the problem. You know, people are not taking into consideration of what's going to happen next year or the year after that as I continue to rack up this debt and can no longer afford to pay my bills. Am I going to be the next one homeless on the street, can't afford a place to live? Well, at least I gave, you know, Johnny an Xbox or a PlayStation 5 for Christmas last year. I'll be feeling good about that while I'm sleeping in the tent. No, but yet 35% of Americans say that they're considering buy now, pay later loans this holiday season, which is an 8 percentage point increase from 2022. So tell me things are not getting worse when more and more people are looking at doing this. You see, that's one thing I like to say that I do here on the channel, is I like to read between the lines and notice these subtleties that are happening out there and ignore what the mainstream media is saying about these wonderful GDP reports and the stock market is shooting up, all of this. Well, that's great, guys, but none of that negates the fact that more and more people are looking at buy now, pay later loans to be able to buy holiday gifts. And this is not just people who are broke or, you know, on low income housing, guys. You're talking people that make 6 figures a year of $100,000 or more, okay, 40% of those people are considering using buy now, pay later loans this holiday season, which is double last year's figure at 21%. So this kind of stays in line with the trend that we're seeing, that more people than ever that make 6-figure incomes are living beyond their means and living paycheck to paycheck, because there is no reason in this world why somebody who makes over $100,000 a year should be using buy now, pay later and going into debt in order to buy Christmas presents. That is just absolute lunacy. And this whole trend with people using buy now, pay later kind of started before the pandemic, but of course once that happened, it started ramping up from there. And the worst part is, a lot of people apparently use these buy now, pay later loans at the last minute. Like they just make a spontaneous purchase with it, and then next thing you know, they end up with 3 or 4 different buy now, pay later loans that they didn't have a month ago. All just to buy a bunch of ridiculous crap that was made in China, poor quality, that's probably gonna break in a few years from now, and no one's even gonna care about it in a few years from now either. And if you think the interest rates on credit cards are bad, oh, just wait. If you can't pay your buy now, pay later loan, you could be facing up to 36% interest payments if you miss a payment or don't pay on time. You also have late fees, which can be as high as 25 bucks a pop. So when you throw in interest plus late fees plus the actual amount you borrowed, you can see how it easily adds up. And of course, the more debt that people take on in general, then the higher likelihood that somebody in that position is likely to default on something. Maybe they'll miss their Tesla payment. Maybe they're gonna miss a house payment. Maybe they're gonna miss a credit card payment. Maybe they're gonna miss a student loan payment. Maybe they're gonna miss the buy now, pay later payment. Maybe they'll miss all the payments. Now, one thing that this story says here, which I sort of agree with, at least in the short term, is that, hey, instead of using a buy now, pay later loan, get a credit card at least that gives you 0% interest for the first year and use that. Now, I like that for only one reason, and that's 0% interest during the introductory period. So if you know 100% you'll be able to pay it off within that introductory period, then that's the way to go, because you're going to pay 0 interest and still be able to buy those gifts. However, this is not a reason for people that can't afford the purchases, like who are using buy now, pay later, to do this instead, because it's all the same thing then. It doesn't really matter which way you used to finance it if you know you're going to be making interest payments on it. I don't know if you guys can see the recurring theme here, but can't you tell? This is all about affordability, or the lack thereof, throughout this entire economy right now. People can't afford houses. People can't afford car payments. So you have more people than ever losing their cars right now to the repo man because they can't afford the car payment. You have the amount of credit card delinquencies ramping up. You have people deciding not to pay their student loans on purpose. And so to me, it's super clear that people can't afford anything anymore, but yet we're getting all these reports about how strong the economy is. So if I were you, I wouldn't be fooled by all those stories, first of all, and I also wouldn't even be fooled if you see all these people out spending money. Like I see comments sometimes saying, oh, the restaurants are still full around here, or I still see people buying this and that. Well, yeah, obviously people are using debt to do that, guys. Now, is everybody in bad financial shape who's out spending money right now? Of course not. But when you hear things like this, it's pretty apparent that a large majority of people who are spending money that they don't have. Most of it's borrowed, and there's probably going to be a lot of defaults coming down the pipeline with every single type of loan that people get. Just be ready for that. I know I am. I'm just waiting for the day when I see more news stories saying, hey, the credit card default rate is skyrocketing. The buy now, pay later loan default rate is ticking up. And more people are missing car payments again. You know, more mortgage delinquencies. And we're already seeing those stories now, but I anticipate seeing more of them going into 2024. So if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.